When the markets start bleeding red, most people feel that pit in their stomach. They watch the value of their life's work, their retirement savings, their kids' college fund just evaporate in a storm of panic selling and scary headlines. For the average person, a market crash is a tragedy. It's a time of loss, anxiety, and the feeling of being completely helpless. But for the ultra-rich, a crisis isn't a threat. It's a multi-billion-dollar opportunity. You see, while the rest of us are glued to the stock market ticker, watching our portfolios shrink, billionaires are playing a completely different game. They aren't panicking. They're positioning. They see a global crisis as a clearance sale, a once-in-a-decade chance to scoop up assets from weak, fearful hands and into their own strong, strategic ones. They pull their money out of the very stocks everyone else is desperately selling and slide it into shocking assets you've likely never even heard of. While you're being told to sell, they are quietly buying up endless acres of farmland. While the news is screaming about economic doom, they are buying bonds that literally bet on hurricanes and earthquakes. This isn't some conspiracy theory. It's the playbook they use to get richer from the very chaos that makes everyone else poorer. So, let's pull back the curtain and see exactly how they do it. We're going to break down the assets they use, the mindset they have, and the strategies they deploy to not just survive a crisis, but to come out of it wealthier and more powerful than ever. Think back to 2008. It felt like the world was ending. Lehman Brothers collapsed, and the entire global financial system was teetering on the edge of failure. People lost their homes, their jobs, their savings. It was a time of intense fear for millions. Yet, right in the middle of that chaos, a select few were making the deals of a lifetime. Warren Buffett, for example, wasn't selling. He was injecting billions into companies like Goldman Sachs and Bank of America, not as a bailout, but as a shark, securing amazing terms that would generate massive profits for years. While Main Street was getting wiped out, Wall Street's sharpest players were using their cash to buy quality assets at fire sale prices. And then 2020 hit. The world shut down. Markets plunged faster than ever before. And what happened? The same pattern. While everyday investors were panic selling, institutional money and billionaire family offices were putting their capital to work. They weren't trying to time the bottom. They were just buying value where they saw it, knowing that fear always creates opportunity. This isn't a coincidence. It's a system. The billionaire mindset during a recession is the complete opposite of our normal human psychology. While most people chase hot stocks in good times and sell in a panic when things go bad, the ultra-wealthy just build up cash and wait. They wait for that moment of maximum pessimism, for what Baron Rothschild famously called the moment when there is blood in the streets. They see a crisis not as a danger, but as the main way to accumulate even more wealth. Their strategy isn't just about stocks either. It's about diversifying into assets that most of us don't have access to, or don't even know exist. These are often called uncorrelated assets investments, whose value is untied to the daily ups and downs of the stock market. While your stock portfolio is tanking, these assets might be holding steady or even going up. This is the core of their secret playbook. And the first, and maybe most important, of these secret assets is something real, ancient, and absolutely essential to our survival. So, what is the first secret asset they re-snapping up while everyone else is glued to their stock apps? It's not some flashy tech stock, it's not gold, and it's not Bitcoin. It's something far older and far more real. Endless acres of American farmland. That's right, the dirt under our feet that grows our food. It might sound boring compared to AI or space travel, but to the world's wealthiest people, it's one of the most strategic assets on the planet. For years, billionaires have been quietly buying up huge amounts of agricultural land. One of the biggest players is a name you definitely know, Bill Gates. Through his investment firm, Cascade Investment, the co-founder of Microsoft has become one of the largest private owners of farmland in the United States. holding around 275,000 acres. And he's not the only one. Media mogul John Malone is the largest individual landowner in the U.S. overall, with a staggering 2.2 million acres of ranchland, timberland, and farmland. Amazon founder Jeff Bezos also owns huge tracts of land, primarily ranchland, in Texas. These aren't just hobby farms. They are massive, strategic investments. So why are tech billionaires and Wall Street titans so obsessed with dirt? There are a few powerful reasons, and they all show why farmland is the ultimate crisis asset. First, it's a killer hedge against inflation. When governments print money during a crisis, and they always do, the value of your cash goes down. But the value of real, productive assets tends to go up. Farmland is a perfect example. The value of U.S. farmland has more than tripled over the last 2 decades. It's a real store of value because its supply is finite. They aren't making any more of it, and the demand for what it produces, food, only goes up as the global population grows. Second, it generates stable, passive income. Billionaires like Gates aren't usually driving the tractors themselves. They buy the land and then lease it out to farmers, creating a predictable, landlord-like cash flow. This income is consistent, whether the stock market is up or down, providing a steady return even during a recession. Third, and this is the key, it is an uncorrelated asset. The value of farmland and the income it generates are not directly tied to what happens in the stock or bond markets. A financial crisis in New York doesn't stop corn from growing in Nebraska. Geopolitical tensions might send stocks tumbling, but people still need to eat. This independence from market drama is what makes it such a powerful tool for preserving and growing wealth in chaotic times. But there's a deeper, more strategic reason. Owning farmland isn't just about money. It's about control. When you own the land, you own food production. You own the water rights. In a world that feels increasingly unstable, controlling the resources essential for survival is the ultimate form of power and security. Now, you might be thinking, that's great for a billionaire. But I don't have millions to buy a farm. And you're right. For a long time, this was completely off limits to regular people. But that's starting to change. Today, there are a few ways for regular investors to get a piece of the action. You can invest in publicly traded real estate investment trusts, or REITs, that specialize in agriculture, like Gladstone Land Corporation or Farmland Partners. These companies own farms and trade on the stock market like any other stock. There are also crowdfunding platforms that allow accredited investors to buy fractional shares of individual farms. While these still require some capital, they've lowered the barrier to an asset class that was once the exclusive domain of the super-rich. The key takeaway is the mindset. The wealthy aren't just looking for the next hot stock. They're looking for real, durable assets that provide value no matter what. And while stocks are a claim on a company's future profits, farmland is a claim on humanity's most basic need. Before we get to the next asset, which is even more shocking and involves literally betting on global catastrophes, you re-getting value from this look into the real playbook of the wealthy. Do me a favor and hit that subscribe button. We get into these kinds of strategies every single week, and you don't want to miss what we uncover next. All right, if you thought buying up the nation's food supply was a bold move, the next asset in the billionaire playbook is on another level of audacity. It's an investment that sounds like it was ripped from a disaster movie. We're talking about financial instruments that profit from chaos in its most literal form. Catastrophe bonds, or cat bonds. Imagine a world where you could earn double-digit returns, because a hurricane did not hit Florida. Or because a major earthquake did not strike California. That is the bizarre and highly lucrative world of catastrophe bonds. So what on earth are they? In simple terms, a cat bond is a way for insurance companies to offload their biggest risks to investors. Think about it from an insurer's perspective. What happens if a once-in-a-century superstorm hits, like Hurricane Andrew in 1992, which bankrupted several insurance companies. The claims could be so massive they'd be wiped out. To protect themselves, they bundle up the risk of a specific disaster, say, a named hurricane causing more than $50 billion in losses, and sell it as a bond. Here's how it works for you, the investor. You buy the bond, and for taking on this risk, the insurer pays you a very high interest rate. If, during the life of the bond, usually 1, 2, 3 years, the specified catastrophe doesn't happen, you get your entire investment back, plus all the high interest payments. You win. However, if the disaster does happen and meets the exact trigger conditions, you lose your investment. That money is then used by the insurance company to pay claims. You are, in effect, acting as the insurance for the insurance company. It sounds incredibly risky, and it is. But the returns can be extraordinary. The cat bond market has been booming, with record issuance in recent years. By the end of 2025, the total outstanding market had swelled to over $61 billion. This growth is driven by climate change and inflation, which make disasters more frequent and costly, forcing insurers to seek more protection and pay higher premiums to investors. But the real genius of cat bonds for a billionaire's portfolio isn't just the high yield. It's that magic word again. Uncorrelation. The probability of an earthquake hitting Japan has absolutely zero to do with the S&P 500 or what the Federal Reserve decides. Their performance is dictated by meteorology and geology, not market psychology. This makes cat bonds one of the most powerful diversification tools out there. During a financial crisis, when stocks, bonds, and even real estate might all be falling together, cat bonds are in their own world, cranking out interest payments as long as their trigger event doesn't occur. This isn't some niche market. It's a sophisticated asset class dominated by hedge funds and billionaire family offices. For decades, you couldn't touch this market without being a multimillionaire. But just like with farmland, that's slowly changing. The first catastrophe bond ETFs, like the Brookmont Catastrophic Bond ETF, ILS, have started to appear, giving more investors access to this complex and risky world. The lesson here is profound. The ultra-wealthy actively look for risks that are completely different from those in a traditional portfolio. While everyone else is trying to diversify their stocks, billionaires are diversifying their very sources of risk, moving beyond financial risk and into scientific real-world risk. They're playing a totally different game. Farmland and cat bonds are two of the most dramatic examples, but they're just part of a much bigger strategy. The secret playbook isn't about one magic asset. It's about building a fortress of different assets that can withstand any storm. The rest of the playbook includes things like private credit, where they basically become the bank, lending money directly to businesses at high interest rates, completely outside the public markets. It includes huge investments in infrastructure, think toll roads, airports, and power plants, assets that provide essential services and generate predictable cash for decades, no matter what the economy is doing. It even includes tangible things like fine, art, rare, wine, and collectibles, which have their own markets driven by scarcity and passion, not corporate profits. But owning these assets is only half the strategy. The other half is how they use them to legally and masterfully slash their taxes. The most powerful technique is famously known as buy, borrow, die. Here's the simple version. A billionaire buys an asset like a massive plot of land. Over the years, that land goes way up in value. If they were to sell it, they'd get hit with a massive capital gains tax bill. But they don't sell. Instead, they go to a bank and take out a low-interest loan against the value of their land. 'Cause it's a loan, it's not income, so it's tax-free. They can use this tax-free cash to fund their lifestyle or make new investments. Then, when they pass away, their heirs inherit the asset at a stepped-up basis, which means the asset's value for tax purposes is reset to its current market value. This can completely wipe out the tax bill on a lifetime of gains. It is one of the most powerful wealth preservation tools the rich use, although it's a loophole that politicians are starting to look at more closely. What all of this points to is a fundamental shift in mindset. It's a shift from being an asterisk speculator asterisk to being an asterisk owner asterisk. The average investor often acts like a speculator. They buy a stock hoping the price goes up. They're betting on market psychology. The billionaire investor, on the other hand, is an owner. They buy a business, a toll road, or a farm for the cash it generates and the real value it holds. They care less about the daily price swings and more about the quality and resilience of the asset itself. They aren't trying to time the market. They're focused on time asterisk in asterisk the market, but in markets that most people are uneven watching. Their goal is not to avoid risk, but to embrace different, smarter kinds of risk that don't all move in the same direction. A portfolio with stocks, farmland, private credit, and catastrophe bonds is a true all-weather portfolio, designed to have some part of it working no matter what the global economy is doing. So, when chaos hits and the world seems to be falling apart, there are two games being played. In one game, people react to fear, sell their assets at a loss, and just hope to get by. In the other, the world's wealthiest people follow a script. They use the panic of the crowd as a rare opportunity to acquire high-quality, long-lasting assets at a deep discount. They don't just survive the chaos. They use it as the engine to create even more wealth. They move their money from the volatile world of public stocks into the tangible world of real assets, like farmland, which provides security and income. And they venture into the sophisticated world of things like catastrophe bonds, earning high yields from risks totally disconnected from the financial system. The secret of the billionaires isn't about having a crystal ball. It's about having a different playbook. It's about seeing the world not in terms of stock tickers, but in terms of systems, cash flows, and control. It's understanding that true wealth isn't built by chasing market highs, but by patiently buying durable value during market lows. While these specific assets may be out of reach for many of us, the mindset isn't. It's about training yourself to think like an owner, not a gambler. It's about prioritizing resilience over short-term returns. And it's about having the courage to be greedy when others are fearful. So the real question isn't what will the market do tomorrow? It's what will still be valuable, no matter what happens tomorrow. What do you think is the most overlooked asset for surviving a crisis? Let me know in the comments below.